What's going on, guys? Welcome back to another video. My name is Raffay, aka the Crypto Network, and welcome back to another video on the Complete Crypto Guide. Today's short and sweet video is going to be about liquidity, and a lot of you guys have probably heard this term when it comes to low caps and new projects and pre-sales and ICOs. Liquidity is pretty much the term itself represents exactly what it is. Something to make things easier. As you guys know, in every video, I try to simplify things as easy as possible. So liquidity, right? Imagine you are trying to get through something and you just want things to be easier for you, right? Transactions, how much you can buy, how much you can sell without it affecting the price. Liquidity is pretty much essentially how much money is invested into the actual project itself and locked away. And sometimes it doesn't even have to be locked away, which is what people usually have an issue with determining. So today I'm going to be explaining to you why liquidity is important, what it does, who adds liquidity, right? Liquidity providers, and more. So let's say if you want to invest into any new project, right? Let's just use any new project as an example. And we can, so let's just go through CoinMarketCap. And like I said, majority of the time it happens in the low caps. So if we want to go find how much something is backed up by, we go to like the 5th page, and we're just going to use random cryptocurrency as an example that I feel like can be used. So Mask Network, we'll use this as an example. It is an Ethereum ERC20. So what liquidity is how much money is invested into the cryptocurrency and how much money can pretty much be sold and bought. This is not 100% accurate, but let's say if there's $500,000 worth of liquidity, if somebody were to try and invest $500,000 into that cryptocurrency project, it's going to affect the price heavily. Now, similarly, if somebody tries to sell that much amount, then it's going to affect the price extremely. So we'll use this as an example, Mass Network. I'm not being paid to talk about this crypto, and this is not a cryptocurrency I'm currently invested into, but this is something I will be using as an example in this video. So ERC20, right? So that means it's on the Ethereum network and also on the BNB Smart Chain and Polygon. So every blockchain has to have its own liquidity provided. So if a cryptocurrency has multiple networks, the cryptocurrency company has to provide liquidity for each of those networks, right? You can't have $1 million invested from the company into the ERC20 network, and then you try and buying on the BEP20 network and expect the same liquidity. It won't be the same liquidity, so each network will have a different price assessment, and each price will be impacted differently. So in this case, if we go to Etherscan, we can see how much is in there, reading addresses and reading how much is going on here. So we can see that there's 10,451 holders. There's been 164,000 transfers. There are people buying stuff on the actual network, the actual blockchain of this cryptocurrency. 1 minute ago, 4 minutes ago, these are just examples. So we go to the holders and we want to see the liquidity providers. So we can see, hey, these are addresses that are kind of locked away in contracts. These are contracts. You can always highlight and see which one of these are contracts. And we can confidently say that this cryptocurrency project has about $27 million worth of cryptocurrencies locked away, $24 million worth of cryptocurrency tokens locked away, $15 million and $11 million. So far, so good. Everything looks good. But now, this is because the actual cryptocurrency is valued at $1, right? So this will always change depending on the price, and this doesn't always represent liquidity. This just represents how many cryptocurrencies of the actual project is locked away, and it makes things easier, right? What people usually do is they provide about $1 million, $2 million worth of actual liquidity, and then the rest of the cryptocurrencies are available for people to purchase off the blockchain. So now you may ask, how can I determine how much money is, locked away on the ERC20 network? So there's this amazing website called Dextools, and majority websites still use it. So will you use it in this example in today's video just to make things easier for you? You can always go to dextools.io. And again, this is also a tool I like to use that is really helpful. And again, what we're going to do is copy the address, go to the website if it loads, and all chains right here, Ethereum. And now we're going to paste the address, and we should see mass network. So we can see how much is on the actual network and how much exchange on how many decentralized exchanges they're on. So in this case, we'll look at mass network here and we'll see how much is locked away on the USDC pair. So we can see, well, hey, there's about $717,000 worth of liquidity locked away, right? And you can see how long it's locked away by clicking here. And we can always check it out on Unicrypt and all of these other third-party websites that they use it on. But again, that's just one pair, USDC. So same thing, if you want to see other pairs, we can see, okay, you know, it's going to show all the other ones. We can go and check. These two are the exact same. We can go check on Sushi Swap, you know, other decentralized exchanges. Same thing. It's all relatively going to be the same. So we can say that there's $717,000 liquidity locked away on just the decentralized exchanges. So that's a very good sign. So which means this is a blue chip, almost close to blue chip crypto, because it has a very high amount of money locked away just on decentralized exchanges. Now, we can also see that it's on Binance, KuCoin, and Coinbase, and Gemini, and Kraken. These are all elite cryptocurrency exchanges, and I like to call them the blue chip exchanges of crypto. So if you're listed on Binance, Coinbase, KuCoin, Gemini, Kraken, these are my cryptocurrencies I look at. In my eyes, this is a potential blue chip cryptocurrency project. That means it has a correct audit, it has correct liquidity, right? Which means people can't get rugged. And now the reason why liquidity is important is because, again, it's the ease and realization of how fast, not how fast, but how much you can invest and how little you can invest. And if you need to worry about pump and dumps, the more liquidity provided for a cryptocurrency is more of a securing reassurance that, hey, you don't have much to worry about because they have money backing up this project. That's why liquidity is important. Now, an issue that happens in low caps is people often see a new cryptocurrency, but then they don't realize that, hey, this project does not have that much liquidity, right? So any other project you go and check on here using the same method that I just did, you can see that, hey, that cryptocurrency might not have enough liquidity. So is that something I want to invest in? Now, things that I look at, if a new low cap or mid cap cryptocurrency doesn't have at least 100K liquidity, then I'm probably going to stay away from it because there's a pretty good chance that there's an insider who has bought the cryptocurrency before it's been listed. You want to go and look at the addresses. And again, I'll have a whole video about how you can read addresses, read the blockchain. And again, this is why liquidity is important. So you can see that how much liquidity is provided by going to the same method I did. You can see on Binance itself, they have about $7 million worth of liquidity. On OKX exchange, they have $4.7 million. On another Binance, they have $718,000. On Coinbase 5, you know, this is one of the Coinbase exchanges addresses. They have $500,000. So we can confidently say that this is a cryptocurrency project, one, that will most likely last even in a bear market because they have the liquidity. This is B, a cryptocurrency project that we don't have to worry about getting pumped and dumped on. And three, C, is that it is safe and a reassurance factor that we can move forward with our cryptocurrency investment and trade if we deem that this cryptocurrency project is worth investing into. Now, again, that's what is liquidity, why it's important, and the things that you need to look out for when investing into projects because liquidity is important. Now, again, we can use a different example if we wanted to and go look at a project that has no liquidity, why it's not safe. And again, it would be the opposite of everything I just said of why things are safe. So hopefully you guys enjoyed this short and sweet video. I will see you in the next one. And as always, if you guys want to support me further, be sure to join the Crypto Network Community Discord. I will see you in the next one. Peace.